Hey everyone, Coach Investor back to another earnings video. For today we already covered ASML and Netflix. Those videos will be in top right corner. In this video, let's talk about Tesla. The stock is down around 4% at the time of making this video. Of course, throughout the day, the dip can get bought, can get even worse as well. Remains to be seen. But the company beat on earnings per share and revenue estimates. Energy gross margins were much better than expected. Automotive gross margin was a bit lower than expected, but not the end of the day. Remember, still high interest rate environment, still very weird, difficult macroeconomic environment. The company is still investing a lot to grow their own business, and they're still generating $1 billion in free cash flow. So yeah, there is that. Oh, and by the way, they have cash equivalents of close to $23 billion. So safe to say that financially, Tesla is pretty secured right now. And so in this video, we're going to go over the main points from the earnings report and a couple of points that were mentioned during the earnings call, which were very interesting. So let's dive right into this. So let's start with the highlights. Profitability, 9.6% operating margin, $3.1 billion non-GAAP net income, operating cash flow of $3.1 billion, free cash flow of $1 billion. And they say here that Cybertruck factory tooling is on track and the Model Y became the best-selling vehicle globally in Q1, and that's best-selling vehicle, not just best-selling EV. Now, if we look at their growth rate, so total automotive revenue increased 46% year over year, energy generation and storage revenue increased 74% year over year, services and other revenue increased 47% year over year. Now, again, energy business is really underrated right now, and currently with a gross margin of 18.4%, it is better than the automotive one, excluding credits, which this quarter sits at 18.1%. So quite the tipping point moment. And like I said before, this company is still investing a lot in their business. Operating expenses grew 21% year over year. You can see that usually it stayed flat-ish, but right now in Q2, we've seen a little bump there. Of course, it has to do with Cybertruck, upgrades across the board as well. But even so, 46% growth year over year, total automotive revenue, 74% energy, 47% services and other revenue. I mean, this company is pretty remarkable. And then if you look at free cash flow, it is still very inconsistent, despite it being up 62% year over year. But as you can see, Q3 2022 was a much better quarter. Very inconsistent on the free cash flow side, but I do think that going forward, we should be able to stay above that $1 billion. And then here, cash equivalents and investments grew 22%, reaching just over $23 billion. Then we get here some extra info. So for revenue, we've got a negative FX impact of $600 million. With regards to profitability, of course, we knew this was going to happen. So reduced ASP due to mix and pricing, although they did have a positive impact, I think, from the increase in S and X deliveries. Of course, it's part of the business, so no surprises there. Cost of production ramp of 4680 cells and other related charges. More on that later on. Increase in operating expenses driven by Cybertruck, AI, and other large projects. Now on the flip side, the positive things here, lower cost per vehicle, which includes lower raw material costs and IRA credits for the automotive and the energy side, by the way. Gross profit growth in energy business as well as services and others. And then with regards to production, of course, we already seen these numbers. So that grew 86% year over year. But they said during the earnings call, expect production for Q3 to be slightly down because of factory upgrades across the board. Now with regards to Tesla's market share per region, and this is market share of the car market, not just the EV car market, we can see they continue to grow there. As for cumulative miles driven with FSD Beta in the millions, well, again, the tipping point happened back in March 2023, and let's see how high this goes. Of course, we already talked about the potential $100 billion business that could happen. So internal projection of Dojo compute power, October 2024, they expect to reach 100 exaflops there. They did say during the earnings call that they do expect to use both NVIDIA and Dojo. They said whatever NVIDIA can deliver, they'll take, and this could explain the huge guidance for NVIDIA and maybe even another beat and raise soon enough. And yes, these investments in Dojo are designed to reduce the cost of neural net training. Now, as for energy storage deployment, again, I think we've reached a tipping point. You can clearly see this right here. For services and other gross margin, we are nearing that 10% line. Don't expect it to be much more than that. I think we'll stay around that 10% for the long-term future, which should be good enough. Then as for outlook, as always, for 2023, they expect to remain ahead of the long-term 50% CAGR with around 1.8 million vehicles for the year. With regards to profit, while we continue to execute on innovations to reduce the cost of manufacturing and operations, over time we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. And as for the product, so the Cybertruck remains on track to begin initial production later this year at Gigafactory Texas. In addition, we continue to make progress on the next generation platform. And whenever that gets announced and started, things will get much more interesting. And one of the last things here, so interest income, well, since Tesla can use the current interest rate environment to its advantage, so we can see close to a 10x increase from last year and still a $25 million increase from last quarter. Always nice to see. Now, last couple of things before I end this video, a couple of things that were mentioned during the earnings call with regards to FSD, with regards to 4680 cells. So, first of all, they are open to license FSD. Not surprising there, especially after all the partnerships that they made with regards to the supercharger network. And they said that they are already in talks with a major OEM about licensing Tesla FSD. If I was a betting man, I would say it would be Ford. Now, they also said that FSD will be transferable in Q3, one-time thing only, so take advantage of that. And with regards to cell production of 4680s, there was an 80% quarter-over-quarter increase in cell production, 25% reduction in cell cost, and higher energy density improvements. So finally, we're seeing some good momentum there. And so if we look at the chart here, the stock is down around 4%, so $279, $280 or so. This red line was before, when this was a bit of a resistance at 280. Let's see if this can serve as a type of support line right now. Again, on the weekly, we are overbought currently, like a lot of big companies out there, big tech companies are a bit overbought right now. So don't be surprised if there is a small sell-off happening. Overall, take advantage out of that, especially if the earnings report is quite good. As we've seen with Netflix, ASML, and now Tesla, earnings report good, stock reaction bad, should be good for long-term investors. So that will be it for this video. Of course, do share your thoughts down in the comments below. I will still be making the weekly Tesla video on Saturday, going over some other numbers, so don't worry about that. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.